friends, Namaskar. In this video, we are going to discuss about PE ratio, यानी कि price earning ratio. PE ratio is very important financial tool which is useful for making the relative evaluation of shares of many companies. By using this ratio, you can promptly identify which companies' shares are good and which companies' shares are not that good for the investment. Now, what is PE ratio? PE ratio is market price per share divided by earnings per share. You can also write this MPS by EPS equals to PE ratio. For example, if equity share of a company, let's say X Limited, has current market price of 400 rupees and the company is expected to earn rupees 40 per share within next 1 year, then what is the PE ratio? PE ratio of this company's share is MPS divided by EPS equals to 400 divided by 40 equals to 10, and it is expressed in times. It is expressed in times. Okay. Now, what is this PE 10 means? PE 10 means to earn 1 rupee, the investors are willing to pay 10 rupees as an investment. In other words, if the company is earning rupees 1, the price of the shares is 10 times that of earning, and the investor has to pay 10 times of the earning in order to buy the share of the company. Now, next question is PE 10 good or bad? This is very important. To know this, you need to understand the application and nature of PE ratio. Friends, PE ratio is a relative evaluation tool, which means definitely PE ratio will give you a number, but that number will not in itself tell you either it is good or bad. To make an evaluation, you need to do the comparison using PE ratio. So, let's take an example. Suppose there are two companies, X Limited and Y Limited. The current market price of X Limited is 400 and current market price of Y Limited is 450. The expected EPS of X Limited is 40 and the expected EPS of Y Limited is 50. So now what is PE? PE is 400 by 40, that is 10 times, and 450 by 50, that is 9 times. Here X Limited's PE is higher than Y Limited's PE. Does this mean X Limited is better than Y Limited? So here comes another question: how to interpret PE ratio? Friends, interpretation of PE ratio is very interesting. First of all, for a new investor, the share of those companies having lower PE ratio is desirable investment, because the companies having lower PE ratio are considered cheaper companies, or the share of those companies are inexpensive as compared to the companies having higher PE ratio. Sasta padega matlab. Does this mean this interpretation is always applicable? The answer is no, because when the price is lower, this also indicates that the investors are very cautious about the future of the company. They are not being optimistic about the future of the company. They don't see a good growth rate in the overall value of the company. They don't see a good long-term return from the company's shares. So here you need to be very careful. On the other hand, the higher PE ratio is thrilling because the investors of the company are very optimistic about the company's future. Hence, the price of the company's shares has skyrocketed. But it also indicates that the company's share price is expensive. Does this mean as a new investor, you should not buy the company having higher PE ratio because they are expensive? Answer is no. You need to see why it has higher PE ratio. You need to see either the company's long-term potential is good or not. if that is true, then the other investors who are very optimistic about the company are also true. So let's throw some more light into the interpretation of PE ratio. First of all, let's understand why PE ratio is lower. Lower PE ratio होने की वजह कौन कौन सी हो सकती हैं? I'll try to divide them into 3 parts. सबसे पहले लोअर PE रेशियो इसीलिए है क्योंकि कंपनी अभी स्टार्टिंग फेज में, ग्रोइंग फेज में है, धीरे धीरे आगे बढ़ रहा है, ठीक है, एंड अभी इंडस्ट्री के अंदर जस्ट कदम ही रखा था, तो इस वजह से उसका PE कम हो सकता है. दूसरा ये हो सकता है क्योंकि उसका प्राइस लो हो गया है बिकॉज ऑफ सम बैड र्यूमर. ये एक शॉर्ट टर्म फेनोमेनन है, ये ठीक हो जाएगा. इस केस में आप इन्वेस्ट कर सकते हैं इफ दैट इज ओनली अ फॉल्स र्यूमर, ठीक है. एंड द थर्ड रीजन कैन बी द इन्वेस्टर्स डोंट सी एनी चार्म इन इट्स ग्रोथ. दे डोंट सी दैट इट हैज अ फ्यूचर or a good future. So investors are very pessimistic about the company. Okay, so for these 3 reasons the PE can be lower. So you need to identify for what reason the PE of the company is lower. Similarly, on the other hand, when the PE ratio can be higher. So let's try to dig in the reason for higher PE. Similar, higher PE, investors are too optimistic about the company, they are excited. Okay, so optimistic investors can be one reason. Another reason is there is rumor about the company which is false, which is not true, and that rumor is about the positive nature of the company. So false positive rumor can lead a higher growth in the price of the company for short term only. It is a short term phenomenon. So positive but false rumor. Okay, so this can be another reason, but this is a very short term phenomenon like this one, bad rumor or positive false rumor. And the third one is the company is actually showing the outstanding performance, very fabulous growth rate. So it can be outstanding performance. So you as an investor, as a new investor, you need to see why the PE is at higher side. अभी तक हमने समझा PE रेशियो क्या है, उसका इंटरप्रिटेशन कैसे करना है. अब हम समझेंगे उसको यूज कैसे करना है. यूज एज आई ऑलरेडी मेंशन्ड कंपैरिजन के लिए करना है. तो कंपैरिजन के लिए हम क्या करेंगे, कंपनी की PE रेशियो जो है उसको दूसरे कंपनी के PE रेशियो के साथ कंपेयर करेंगे, एंड दैट दूसरा कंपनी शैल बी सिमिलर कंपनी विद इन सेम इंडस्ट्री. यू कैन कॉल दिस कंपटीटर. ओके, और दूसरा कंपैरिजन जो है वो है कंपनी की PE shall be compared with the average PE of the entire market और average PE of the entire industry. ठीक है, तो उस इंडस्ट्री के अंदर, उस सेक्टर के अंदर जितनी भी कंपनीज हैं उन सब का PE का एवरेज लेंगे. उस एवरेज PE के साथ, दिस इज कॉल्ड मार्केट PE और इंडस्ट्री PE, उस PE के साथ इसको कंपेयर करेंगे, इस कंपनी की PE को कंपेयर करेंगे. इससे हमें अंदाजा लग जाएगा कि इज इज गुड और बैड, हायर साइड में है, लोअर साइड में है. हाउ टू इंटरप्रेट वो तो मैंने पहले ही बता दिया आपको. ठीक है, तो चलो एक रियल लाइफ एग्जांपल लेते हैं. इंडस्ट्री FMCG, इसके अंदर 2 कंपनीज, ब्रिटानिया एंड नेस्ले. ब्रिटानिया हैज अ PE of 49 and Nestle have PE of 85. Now as an investor you tell me which one is better. Nestle better है क्योंकि इसका PE हायर है और लोग इसको ज़्यादा पसंद कर रहे हैं, इसका प्राइस बढ़े जा रहा है, या फिर ब्रिटानिया पसंद है जिसकी PE कम है तो चीपर है. एज ए इन्वेस्टर यू शुड बाय दिस कंपनी. तो आप ये चीज़ कमेंट सेक्शन में बता देना मेरे को, क्योंकि इंटरप्रिटेशन का स्किल्स मैंने आपको बता दिया. सो दिस इज अप टू यू, बट इफ यू आस्क मी आई विल से बोथ आर गुड कंपनी, एंड एज कंपेयर टू द नेस्ले, ब्रिटानिया is cheaper. I'll go for the Britannia. Okay. However, this is my personal opinion. You can also buy Nestle because the share of the Nestle can intrigue you, it can captivate you. Now the another comparison you can make is you can compare both the companies with the average of the market. So if you see the average of the market यानी कि इंडस्ट्री PE industry PE, it is 44.5. Okay. Now what is it? If you see other similar companies which are there in this industry FMCG, the P of all those companies including Britannia and Nestle, the P of all those companies when averaged, it is 44.5. The industry has lower P than Britannia, the industry has lower P than the Nestle. So as compared to the average of the industry, both Britannia and Nestle are expensive shares. But still people are buying them, still people are loving these shares. So you need to see other factors while doing the interpretation. But definitely it is going to give you a primary hint which is going to help you a lot while making the investment decisions in various shares of the companies. Now the another question is how to calculate the PE ratio. As I already mentioned, PE ratio is price divided by earning per share. However, there can be two types of PE ratio on the basis of earnings you are concerned. So one is trailing PE, another is expected PE. So what is trailing PE? Trailing PE is PE on the basis of last year's EPS, and expected PE is PE on the basis of coming year EPS. So if we are here, this is today, and if you take last year's EPS, let's say this is EPS 0, then it will be, let's say this is current market price, it will be CMP divided by EPS 0. CMP means current market price. And if we take next 12 months EPS, expected EPS, we are estimating this EPS, that's why I am calling this expected EPS. If we take next 12 months EPS, this will be EPS 1, and the PE ratio will be called expected PE ratio. So on these two bases, which EPS you are taking, it can be trailing PE or expected PE. So the final question is, you need to be careful while taking the PE. If you are considering trailing PE, then compare trailing PEs. If you are considering expected PE, then compare expected PEs only. Okay, so you cannot mix up. So this is all about PE ratio. I hope this video have been very useful for you. For similar tips, tricks and topics, you can do some comments in the comment section. And don't forget to like, share and subscribe our channel. Keep watching, keep learning, have fun.